It is great to have you with us, and congratulations are in order for two significant developments. The elevation of your office, the Office of Compliance Inspections and Exams, to a Division of Examinations, and just yesterday, the publication of the Division's 2021 priorities. So I'd like us to talk about both of those today. Let's start with asking you about elevating the stature of your office.
Just real quick, today's views are my views and not the views of the commission and everybody else there. So, we're a division now, and it's something that I've been striving for 4 years since I became director. And, I think, a couple takeaways. One, we just grew so much just as the industry grew. We're over 1,000 employees. We're in 12 offices. Our mandate, we continue to take on new types of registrants. And so, I think for all intents and purposes, we truly were, doing division work. We have our 4 pillars in terms, I think the important ones for us, besides preventing fraud, which is near and dear to my heart, are promoting compliance, informing policy, and then monitoring risk. And, I think with all those, I think it makes sense for us to be a division, just given what we've done and how well the staff has performed over the last several years. And the other thing too, I think it is an important takeaway for me, and I think it was really important if you read my speeches that I've done over the last several years about how important compliance is and promoting compliance. And, and I think, it sends a statement by the commission raising the exam program to a level similar to, several other divisions. I think it just, it sends a message publicly that, compliance is important. And so I'm delighted from a morale standpoint. The team's really excited. And, that was probably one of the highlights of my career, is telling 1,000 people on Zoom that we're now a division. And that was it was really special. So thanks.
Well, that's really wonderful. And hopefully you'll have a few more highlights in the years to come as well. Let's change gears a little bit and talk about COVID. Can you talk a little bit about the impact that the pandemic has had on the exam program? And just generally, are you expecting fewer on-site exams going forward? Is remote exams going to be sort of more the natural order of things?
So we did shift in March, and we've continued to maintain almost all exams in a virtual environment. I do think the world is going to change coming out of this. What was nice is for us, it was a successful transition, because if you think about our core job is to work remotely at registrants doing exams. And so for us to work from our homes or from, some other place that, for me, my basement, we've been fortunate enough that the technology was there, and our ability to switch like that was pretty seamless. But I do think that, before COVID, we were doing around 30% of our exams through correspondence. I think that will be higher. I mean, there's no substitute for being on site, but I think a lot of the types of exams that we do are very conducive through correspondence and interviews, and particularly how the world of Zoom and the world of virtual has been so successful, and so I do think that we will do more in a remote setting. I think in certain circumstances, we got to be there, and it makes sense to be there. There's certain flavor that you can get from a firm in terms of who they share office space with, who's coming and going, what sort of information security controls do they have, that sort of thing. But I generally think that you will see us increase that. The other thing, too, is, by doing virtual, you take away travel time. So from just a pure efficiency standpoint, I know that's something we talk a lot about, just in terms of really trying to improve our efficiency, not having travel time on Mondays and Fridays. I mean, that there's some pluses to that we can spend that time actually doing, concrete work, as opposed to, hoofing it to an airport and flying back and forth. So I do think you'll see some.
I was going to say that's a good segue into talking about efficiencies, and you do talk in your priorities about exam coverage and statistics and the efficiency or lack of efficiency of the staff. Can you touch on that a little bit? What are you seeing in terms of coverage?
Yeah, so our coverage this past year in COVID with switching and really, and we gave industry additional time, in several areas, and paused on the more routine exams, in March and April. But we still finished at 15% coverage of investment advisors and, a pretty comparable coverage on ICs as well. But it's something that, I think, and that's with, it was overall our exams were down maybe 4%, which, I was so proud of the team to be able, if you're doing exams and you have children teleschooling, you have pets, you have, outages, and, there's a lot to juggle that normally didn't have to do. And so it's worked out okay, but we'll, I do think that this coming year will be tough because, the growth of advisory in that population continues to escalate, and, certainly the complexity does too. And, and I will say, what a nutty year, not just with COVID and market volatility, but just so many different things that have come up recently in terms of solar wind, OFAC orders, the meme stocks, and just, there's just a lot of areas where we have to pivot from a cost perspective. And so do compliance people. You all are, fighting that good fight as well, having to deal with, well, what am I going to deal with today? And so, I think our coverage will, we're hoping for 15%, but it's going to be tough without, additional resources. So,
yeah. Well, let me just say that the IAA is strongly supportive of additional resources for the exam program. We are supportive of self-funding for the SEC, and we are here to be as helpful to you, Pete, as we can be. So do call on us for ideas or whatever we can do to help. Before we turn to talking about the priorities specifically, we do have a question. Right now, would you only go on site for a non-routine exam, or are you also going on site at all for a routine exam?
That's a great question. It's dissipation of assets, destruction of documents, pretty significant fraud concerns would we go on site. There may be some instances in an information security perspective, particularly with our TCP team, that we may go on site. But right now it's very rare. And it's something, those would be the instances where we would go.
And that's helpful. Let's turn into the priorities now and spend some time. And why don't we go back to COVID? And if you can talk a little bit about how the pandemic informed your priorities, and whether you can give us any updates on staff observations around COVID, and whether there are some best practices or areas for improvement that the staff has seen. And finally, if you can maybe just touch on whether we can expect to see another risk alert on the pandemic.
Sure. So, in terms of how COVID influenced our priorities, I think you'll continue to see cybersecurity as part of, it was before a priority, but, with COVID, we put out the risk alert that basically identified 6 areas. Fraud was a worry, customer interaction was a worry, as all the employees went remote. Cybersecurity is obviously a greater risk. Record keeping and things like that need to be rethought. So all those areas, I think, one of the things we did a lot of outreach. We talked to, I think it was over 700 firms, and and most of that was outside of a exam context. If we had an open exam, we'd cover, hey, how are you doing with this whole COVID pivot and moving to remote, and we heard anecdotally that. Well, let me step back. The one thing I will say is overall, I think the industry responded so well to moving to a remote setting. That was really, really impressive. There were some blips. There were some tough things that had to be figured out in terms of paper documents and notaries and, mail, frankly. But I would say that overall, printers, overall that the market, the markets operated, the infrastructure held strong, and with record volatility, I really just, customers were able to trade and make investments. I mean, it really has been. We've been very fortunate. I don't think if it was 5 years ago with technology where it was then versus where it is now, I don't think we would have been there. Some of the anecdotal things we heard is that, when traders were all sitting at a desk together and they would have their conversations and, everything, there was a huge uptick from a compliance review perspective of instant chat and email, because when folks aren't in the same room, the next step is to do it electronically. And so I think that there was, a higher level of higher volume of in fact, exponentially is what we've heard in terms of the monitoring that needed to be done of electronic communications. And so, do I think there'll be a risk alert after this? I don't know, because I will say that, we've been relatively impressed with how the industry has continued to operate. Exams have functioned. I think compliance roles have functioned. I think with SolarWinds and some of the cybersecurity stuff, you'll see more activity from us there. But I think overall, we'll probably focus, in terms of risk alerts that you'll see, we have a number in the pipe. We just did digital assets, so that went out last week. We're hopefully going to continue to do risk alerts. I mean, last year we did 8 plus the cyber statement plus 2 regular statements, one on BI, and well, they 2 on BI, and 1 on COVID, I should say. And so, I think we'll continue to do those publications. I think they're important. We're working on an ESG risk alert based on some exams that we've done this past year, because we think it's very timely, and obviously it's going to be a priority for us. But one of the things that we've heard is wanting to get the industry wanting to get in compliance, wanting to get some help on what are areas we're focused on. And I think you and I are going to talk a little bit more about ESG a little later today.
That's obviously a very hot topic, right? So while we're in COVID, Pete, can I ask you a question about a specific sort of COVID-related issue, the Paycheck Protection Program, PPP?
Sure.
It came out to much fanfare, and then, frankly, from my personal perspective, there was a lot of naming and shaming, and I think people were just really scurrying about trying to figure out how to apply, whether to disclose, whether to take the loans. And so I'm wondering, are you examining advisors that either applied for or took PPP funds? And if so, what are you looking for?
So it's a great question. And think back to March 31st. So it was the end of the first quarter. The markets had gone down, at least the Dow had gone down from maybe 28,000 down to close to, 20, a little less than that. And so you think about those first quarter billings for IAs, I mean, they were materially lower. And so I think, thinking back to that time, it would be understandable for firms to seek assistance if they needed it, because their billings may be, it's particularly smaller businesses. I think some of the areas that we found, I guess IM had put out some guidance as well on when to disclose it. If it's a poor financial condition, does it need to be disclosed? Fortunately, the markets came back, and so I think that that's been good for the industry and good for investors, frankly. But I think the disclosure of a poor financial condition would be an issue. Disclosures around what they did, and to ensure that in terms of if they took it, there was no misrepresentations. The one thing I'll say that outside business activities is flagged as well, is if that's come up, and if we do find true misstatements that were made to the SBA, we'll refer to the SBA. So that's something that it's we're following the IM guidance that IM issued. And so I think, but, to the extent we see, fraud, on those applications that if we come across it, we'll kick it to the SBA.
That's helpful. Another favorite topic of this audience is Form CRS. So, Form CRS, as you can imagine and know probably from your exams, was a huge undertaking for advisors, and it's now in effect, and folks have issued have put out their Form CRSs. So you have put out some initial observations, or the staff has generally. Are there any highlights you can share with us around what you're seeing from your exam observations so far?
It's so one thing we're focused on, and we're doing a pretty significant number of exams of advisors. We had identified hundreds of firms that we believed should have filed a Form CRS that didn't. And so we did an outreach, and in some cases, reached out twice in an informal way to say, hey, we noticed you didn't file it. You say you have retail clients, just checking in, should you be filing one? And we had a large number that didn't respond to us at all. And so we're opening up exams on them, and to look at the requirements and whether or not that firm should have filed, particularly as they were non-responsive to us, with two different outreaches. So that's something that's in flight right now, and that's an area. And I know that Kristen Snyder, who runs she's the deputy director. She's on a panel later today, I think right after this, where they're going to talk a little bit about the discipline issues and disclosures around that on Form CRS. But that's another area that we're focused on. But, I will say that our priority right now is the firms that haven't filed. In terms of meaningfulness, because I know you mentioned that, they took a lot of time. It's probably the number one document, the first document that our examiners will read as they prepare for an exam. So I think it's an important document. And that's something that, our examiners, it's the first thing I'll pick up if I get assigned to an exam, which I still like to do once in a while, is to read that, because it will give a good overview of the firm and then dig deeper into ADV. So, but I think I think it's a worthwhile document, and it's important. So.
Good. Well, that's helpful. So something else that always seems to be on your list of priorities is private funds. And of course, there's a continued focus on private funds. What are examiners focused on, and also what kinds of things are you observing that give you some pause or some concern?
Right. So with PF, it has been a priority, and I was delighted that the team pulled together, which I think is a pretty meaningful risk alert that we put out last fall for private fund exams. And, it's a pretty robust risk alert in terms of things that we've found. I think with private funds, we'll look at the mainstays of fees and expenses, valuation, disclosures, affiliations, cross trades, principal investments, distressed sales, conflicts around liquidity, if there's advisor-led restructurings. We'll look for, I think this year we're going to focus on, concentrations of structured products like MBS and CLOs. And then, if a private fund owns a portfolio company, that they may have material impact because of the recent economic conditions. So I think, there's a lot to look at right now in terms of impact by the meme stocks, but also, all the volatility that took place back in March and April, and what sort of challenges that created for certain private funds. So that's an area, when we have our private fund unit and they're 25 strong, and they're continuing, and you're going to hear from Igor Rosenblatt, who runs that along with Jen Duggins tomorrow, I believe. Yeah, he's on to present. So.
Yeah, we're looking forward to that. I think there's always, we learn a lot from both Igor and Jen, who are very forthcoming and transparent about what it is that they're looking for. And that's like your risk alerts. I think just transparency coming out of your division is incredibly helpful to folks trying to figure out, working on compliance and trying to get things right. So you had mentioned ESG, and yes, we cannot nowadays do any kind of chat or panel without talking about ESG. So what exactly are you looking for? And one of the questions I'd love for you to try to address is, we always talk about disclosure, and disclosure has to match up. Do what you do, say what you do. But how deeply are you drilling down beyond disclosure to see that practices and investment strategies, for example, match up to what's being disclosed?
So I agree at a threshold level. Important things for us are disclosures, and this gets to your question, trading around what they're saying they're disclosing, that their styles are and their approaches are. We'll look at the trading on it. Policies and procedures are in place to follow. Advertising, if they advertise that they're doing this, and I've seen some fun advertisement, and in the fine print, it's, I think I mentioned this last year at the conference. It was, that where we may invest in 0.00001 to 0.9999, and it's an ESG strategy, and you're just kind of like, really, but I do think, like in terms of boiling down, we'll look at the trading and the investment style, and we'll dig into the detail. And then in terms of, the benchmarks that they say they follow, we'll compare the trading and the holdings versus the benchmarks as well. So it is something that it will get pretty detailed from that perspective. And this will continue as a priority. And then, I think one thing that we were thinking about, and we added to the priorities this year, which gets to your earlier point about COVID and the impact is the climate-related changes on business continuity plans. And so that's an area that we're going to focus on this year as well. It's a little bit different angle than we did last year, but we do think it's much more relevant this year, and so we will focus on that. And that's talked about in the priorities.
Yeah, so just as a follow-up, is this going to be part of pretty much every exam, or is it going to be, we know that a couple of offices were really pretty heavily focused on this over the past year, but can we expect to see it on every exam out of every region, or will it be more like a sweep or targeted exams?
I think it depends on the firm that we're going to, and if ESG is a large part of what they do. I think you're seeing a lot more prevalence of ESG throughout a large number of firms, but I think, we'll risk scope it based on, our pre-work and, our risk analysis and make a determination. It won't be on every exam, but to the extent that it's a prevalent piece to a particular firm, or if we see something that's concerning from an advertising perspective, then we may scope it in.
So let me switch to a topic that I know is sort of near and dear to your heart, which is Libor. And I think what would be particularly helpful to this audience is if you could maybe try to explain why the Libor transition is so important for advisors.
Yeah, no, thank you for teeing this up, because it's something we're worried about. And we did exams. We did a risk alert last summer announcing those exams and kind of highlighting the risk. We've been fortunate enough that the deadline has been told out a little bit to give people more time. I think the big issue here is so Libor, the use of Libor in both contracts, investments, but also everything from risk models to accounting systems. It's widespread, and so a move off of Libor will not only impact customers who may have contracts that won't expire by the time that the transition takes place, and so because it's a contract, it's not something that will be we'll just substitute the rate. These will have to be renegotiated. And once they're renegotiated, the worry we have is that will the investor be harmed in some way? I think additional time tolling out will be, better because more contracts will expire and the new language will be included with an alternate rate or some sort of fallback language. But we did around 60 exams, large, medium, small, and just to get a swath of where the industry was. I think all the big players that are really impacted by it, they have transition teams. They've been focused on the risks. And so we were happy to see that. They've already been preparing for it. I think some of the smaller firms that may have impact, I think they were taking a wait and see approach. This may just solve itself, and I think we're that. And so we're going to do some more exams in that space to continue to raise awareness there, because I do think it could have a material impact.
I think that's very helpful for folks to understand. We do have an audience question that I'd like to just tee up for you, and it goes back to CRS. Would you say that Form CRS has been more helpful for examiners or more helpful for clients, or equally helpful for clients? And that's something that frankly, I think advisors struggle with, the extent to which this is a helpful document for clients.
Yeah, I mean, my view is that it would be helpful for clients. I know I mentioned it because it is something that, we're focused on right now, but I do think that, having a short document to give an overview of the firm, I think that's important. And particularly as that may be the first introduction that, a client may have and, a prospective investor may have with a particular firm. So I think that's, I think it's definitely for the individual investors out there.
So we hope so. We hope so after all this work. We have just a very short time left. I do want to give you the opportunity to just bring folks up to speed on what you're still seeing on share class selection and disclosure.
Sure. So with share class, we're still seeing and finding share class. It's something that, we'll cite in our exams. I think things that we're looking at legacy investments that may not have been reviewed. We're looking at policies and procedures, controls around it. With the migration of registered reps from the broker-dealer side to the investment advisor side, I think some of the understanding and of having those legacy funds, they're not getting updated when that transition happens. I mean, that's an area that we focus on and we see, but we're still seeing it. And so, it's something that, I will continue to prioritize it. And I get that there's some nuances in terms of, and Gail, you and I have talked a little bit about, what happens if, and I've heard this question before, what happens if a platform doesn't offer, the ability? And that's something that, we think about. But I think overall, though, we're surprised to see just some of the carelessness that, filters through to the reps out there in terms of their holdings. And the one thing I'll say is we now have our National Exam Analytics tool, NEAT, that's built in share class as an analysis. So it's just automated. When we do a blotter analysis, we'll now get pops on, either incorrect share classes or, different. Well, it's all automated now. So, so I think that's.
And the concerns are ongoing. So it looks like we are out of time. Right. I think, Pete, you and I could talk honestly for hours, and I think our audience would be interested in what you have to say for hours. So we fully hope and expect that you'll come back again, and we plan to invite you again. So thank you very much for your time.